3M is having a very good day after they announced their earnings. The stock is up more than 5%, and the stock's having a very good year. The stock is up 64% in the last 12 months. And it hasn't been a pretty picture for the last 5 years. It's actually been a great opportunity to pick up a stock that was really beaten down. And I did so way back maybe a year and a half ago. The stock was really beaten down, and it was for good reason. It's a well run company, but they created some products that ended up hurting people. And there was some class action lawsuits that were settled. The good news is that the lawsuits are settled and everything's squared away for 3M. I continue to believe the 3M is a good company and they made mistakes and they're going to pay for the damages that they created. But the stock was really sold off as if the company was just going to cease to exist. And the market tends to do that. From the top to the bottom of the stock sold off 57%. And I happen to think that 3M's a good company. And since then, the stock's more than doubled in value, which is the big opportunity. I like picking up stocks that are beaten down, but really are good companies, and picking up shares and then seeing those shares rise in value, which has been the case here on 3M. The question now is, are they going to continue to rally? Is this going to continue to be a really good thing? Well, let's take a look at the fundamentals, and I'll give you my price target and what I plan to do with 3M stock. I'm currently a stockholder, and I'm glad I'm a stockholder. I think it's a good stock in a good industry. I think it's going to do well in 2025. But let me show you some specifics, and then I'll end with what I plan to do with this stock. Let's take a look at their earnings and see what they announced and if it was good or bad. So to begin with, 3M reported for their full year, and their revenue isn't growing a whole lot. But what is growing is their profitability. Their profitability in the fourth quarter grew was up 17% compared to the year prior. That's very good news that their profitability is really growing. For the full year, it was up 21%. Both are very good numbers. Although their revenue isn't going up, their costs are going down. Their full year operating cash flow is actually, they give us an adjusted number because they are paying out on those settlements, which are going to go away. So I appreciate that they're giving me the adjusted free cash flow. I'm actually going to use that number in my valuation. That's a very good number. And they actually are exceeding on that number. Overall, they're guiding real positively where they're going to expand profits and expand that free cash flow. And they shared that with us. I'm going to jump down to the highlights that I think are most important. That's the guidance. So they're going to guide to be nice and profitable in 2025 and deliver more cash flow in 2025. Those are the two metrics that I use when I value the company. The company has repaired the damage they've created in the marketplace and are on the path of just growing and becoming stronger. Really good things out of 3M. 3M stock is up nicely, a little over 5%. The market really liked the earnings. The stock is almost $81 billion in market cap. Their forward PE, which is going to be 2025, is only 19, which is good. And the dividend is a little under 2%. Analysts believe the stock's priced a little too expensive by 4.58%. The stock is up year to date by 14.9%. So it's working in 2025. As we look at their financials, the financials are in a state of flux. They had to divest the business, so their revenue growth shows as a negative. And that's really because of the divestiture. We'll have to give it time in order to show that the business is actually beginning to grow. Their gross profit is 41%, which isn't incredible, but it's typical of an industrial stock. When we look at the forecast of what analysts believe 3M is going to do, in general, there's a positive sentiment around the stock. It's a buy rating. 16 analysts cover the stock, but they think it's a little expensive. Understandably, the stock's gone up quite a bit over time. It's expected that they're going to begin to grow, and it'd be nice to see them grow mid-single digit. And if they do, the stock's really going to work because they're profitable, very well established, and they're in really good industries. They do defense contracting, they do consumer products, they do building materials. They're in really good industries. The earnings per share is going to expand faster than revenue, as expected. And it's really good to see them really expand their profits. So I really like how 3M is organized well. They're profitable. They fixed the problems they had, and they're on to greener pastures. I believe that 3M, using the updated metrics and information I got from the earnings announcement, I now think that the stock's discounted by 35%. very different than what analysts are expecting. Analysts really focus on earnings per share, and I'm not going to debate that. But most investors, the legendary investors, they use free cash flow. And I believe in free cash flow. It's the true measure of a quality business, a true measure of the value of a business. And the free cash flows they're going to produce are going to be much higher. And the intrinsic value of those free cash flows, in my model, they're worth 134 billion, but the market cap of the company is well below that. It's 51% discounted. If I look at the free cash flows, what those cash flows are worth, and I compare it to the current stock price. Earnings per share, I'm not too far from what analysts are saying. I'm saying it's positive by 5%. They're saying it's negative by 5%. They're probably a little late to updating their price targets. And obviously, I just updated mine today. And I expect that they're going to be updating their price targets and show a higher number and probably a line closer to the number I'm showing here. But overall, I think a 35% discount is really good on 3M. So having said that, my intent with 3M is to continue to buy shares. I like to dollar cost average into quality companies. And one exception being if I own too much of a company. I love Meta stock, but I own a lot of Meta stock. And I'm not buying too many shares these days. But with 3M, I would love to buy more shares. Today is kind of a tough day to buy when the stock is up 5%. But I'm going to plan to buy more into 3M. I think it's really going to work for 2025. So that is my review of 3M. Please don't take this as investing advice or financial advice. I'm just sharing my observation, my analysis, my opinions on 3M. I am a 3M stockholder, and I've been doing videos on 3M for some time. You can go back on my channel and see videos that I made a year ago. You'll see that my sentiment is pretty close to how I feel today about the company. And it's fun to see a business that I believe in kind of repair itself and then come back and see the stock price rise. That's really fun. Really makes investing fun when I can find companies like this that really work. So that's my video. Thanks so much for watching. And I hope you make a lot of money in 2025.